I want to bring in David Smith of Rockland Trust, Chief Investment Officer, to the conversation, and if Shaps can stay with us too, and Charlie, with just about 4 minutes to go before the closing bell rings, there may be some disappointment or over-expectation of what President Trump announces tomorrow night, but looking at your $2.9 billion in assets under management on a day like this where we could see the 12th all-time record close of the year, and folks were there even though the Dow is now up only 9 points. Do you get a little squeamish here and pull some money off the table?
Well, clearly the market has had a heck of a run, and so from our standpoint we have to kind of try to back into how to rationalize these numbers. And so one of the things that we've been doing is looking at all the various programs that the administration would like to put in place and trying to figure out what are the implications for the bottom line of corporate America. One of the things that's probably the easiest of them to get some math around would be a deduction or a reduction in corporate tax rates. So there's been some proposals to reduce corporate taxes from 35% today down to 15%. Now, clearly not all corporations pay 35%, but if you just use that estimate for a moment, and if you take the S&P 500 and look at what the earnings expectations are over the next 12 months, it's about $123 a share. If you were to cut the tax rate and all corporate taxes went down from 35 to 15%,
what would it go
you would
to?
Grow that earnings share to about $164 a share.
Okay, gotcha. Hold on. 2.5 minutes left before the closing bell. The Dow is up 14. Charlie.
David, the big question, though, is why is the bond market predicting something quite the opposite of the stock market right now? I mean, it seems like investors in the bond market are saying, whoa, we're not going to get the stimulus that he's saying, or he's going to spend it on walls and other stuff, not the corporate tax cut and tax cuts, which we know, is better for the markets.
Right. I think the fact of the matter is we just don't know what he's going to get done. We don't even know for sure exactly what he'd like to get done or what his priorities are going to be. And then clearly there's some discussion that has to happen through Congress to get some of this stuff done. So it is a lot of questions. I mean, at the end of the day, both the bond market and the stock market are discounting mechanisms. And there's a lot of uncertainty today, so it's very, very difficult to do the math to discount cash flows.
Now it's less than 2 minutes. Less than 2 minutes before the closing bell. We are looking at the S&P up 2 and a fraction, the Dow up 17. You want to call it, Charlie? You see, 12 records in a row, which would tie us with January of 1987.
Listen, what the markets are saying is give us the tax cuts. That's what the stock market is saying, and we think that earnings will go up. We think the economy will be better. What this bond market is saying, we don't believe that Donald Trump can do a massive infrastructure spending plus do the tax cuts, so hold off on the amounts of fiscal stimulus. That's a real problem for investors. I think you got to see what he says tomorrow. The market could go either way tomorrow, I would say, Wednesday, based on what he says.
Shaps, we got about a minute here. What's the sense? What are you feeling?
We're going to make the record. We're going to close positive. But you had the interview that you did regarding the border adjustment tax. I mean, that's key. So when Charlie says give us the tax cuts, there's still going to be that border adjustment tax fight, but we're going to close positive.
That was Alan Auerbach, the father of the border adjustment tax. He's a professor and he runs the economy department at UC Berkeley. That's on lizclayman.com. I encourage everybody to read that, to go watch it rather, because it was fascinating, and he is with the president on this and feels it's a good one. All right, we have 30 seconds left and we are cueing the confetti. We want to thank David Smith of Rockland Trust. The Dow is gaining 15 points. As I said, this is now the 12th record in a row. The last time we saw that 30 years ago, January 20th of 1987. That is also a record for the S&P 500. The Trump boost continues. And of course, the Atlanta Fed predicted that the GDP for Q1 will come in at 2.5%.